You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com, and co-hosts Alex the Viceroy Jacobson from Options Express, Uncle Mike Tusaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com. The Option Block is brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome back to the Option Block, everyone's favorite bi-weekly source for all things options related. A little bit of education, a little bit of analysis, a little bit of unusual activity, a little bit of wit and or wisdom, some strategy, some OX insight, and to wrap it all up, some listener mail. And you have the potpourri that is the Option Block. My name is Mark Longo from the OptionsInsider.com, as well as from the ever-expanding Options Insider Radio Network. Over a dozen programs on said network, including over 400 archived hours of the Option Block program. Where could you find all of that options goodness? Well, a number of different places, including theoptionsinsider.com. Just click on that Insider Radio Network tab right there, top left of the homepage, and all the shows will pop up. You can choose your show, and then you're off to the races. Stream and download till your heart's content, or, of course, find it iTunes, Stitcher, AHA Mobile, TuneIn. I'm sure I'm forgetting a few out there, but legion different places. Wherever you find your favorite podcast programs, we are there as well. Or, of course, it's all baked into the mobile app, available for iOS, Android, and even the burgeoning Fire OS. So, again, no shortage of ways for you guys. Check out the show, download it, stream it, add it to your playlist, and then send us your questions, your comments once you're listening to the programs. And joining me on said program, starting off with the man, let's go in reverse order today, starting off with the man beaming in from that tropical enclave known as St. Charles, Illinois. You know him, you love him, as Uncle Mike Tusaw from RCM Wealth Advisors. Uncle Mike, welcome back to the program, sir.
Always good to be here, especially in the tropical paradise known as St. Charles.
What's it, 85 out there and sunny?
I'm up in the mountains today, so it's in the snowy mountains, but it's still a tropical paradise when I go to the lower part of the mountain.
It gets down to, it's only 60 where you are now. It's 85 a little bit down the slope.
It was a bit warm for me, so I had to go up to the top of the mountain today. So we don't have a strategy block today, so I don't have to come down from the mountain.
That's true. You can stay up there all day long. All right, and also joining us from a little bit between here and St. Charles, somewhere in the regions in between, beaming in from Casa Jacobson, you know him, you love him, as the Viceroy, a.k.a. Alex Jacobson from Options Express by Charles Schwab. Mr. Viceroy, welcome back to the program. Sir, is it a balmy 60 to 80 degrees where you are as well?
I'm moving to St. Charles if that's the weather. Ironically, my cell phone just chirped with a cold weather warning. So the distance between here and St. Charles must be much longer than I ever expected. It's looks like it's about 1,700 or 1,800 miles.
We make our own weather here.
That's I'm moving. Start looking at real estate listings. In all seriousness, very uneventful day. A premium harvester's day. Today was the day that pretty much everything eroded. The only interesting move today I had on my screen was Facebook trading up over 80. But other than that, real quiet day in the averages. NASDAQ up a little bit, but very small changes pretty much in everything today.
I like that. Might be a good potential title, The Day of Erosion. Or if we want to do some alliteration, The Explosion of Erosion. How about that one? There we go.
Oh, gosh.
That's why I get paid the big bucks. And joining us for his lack of approval is the Greasy Meatball himself, Mr. Mark Sebastian from OptionPit.com. Mr. Greasy Meatball, welcome back to the program. What's the weather out in your neck of the woods, sir?
Oh, it's a balmy. It's actually, we split the middle. It's 55 degrees.
So you're right on the outsides of that enclave, that tropical paradise that is St. Charles. I was looking out the window here at the Options Insider HQ about an hour ago. We are, of course, downtown Chicago listeners, and you couldn't even see across the river here downtown. There was so much snow coming down, so maybe we all need to relocate to St. Charles. But meanwhile, we're going to keep on rolling with the program right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. Like the name implies, this is the portion of the show where we break down what was going on in the market, what was lighting up the old tape and catching our eye. As Alex alluded to, not the most scintillating of days, a lot of premium erosion going on out there. So a few things we could chat about on the old program today, a few earnings, a few other interesting developments. But before we get into those, let's dive in with each of our cohorts. Perhaps we'll start reverse order yet again, go the other way with Mr. Greasy Meatball. What caught your eye in today's activity, sir?
Bonds got a little bit of a shellacking today. And, one of the things I've been watching for is kind of either VIX down a little bit and VIX futures down a lot, or VIX flat or up and VIX futures down. And we saw that today. We saw the VIX settle at 14 on the button, and the March future down a quarter. I still think there's a lot more slack to come out of that. So I fully expect to see like a 15.5 March future by Friday. But today was a step in the right direction to a normalization of a curve that is completely overpriced relative to where it should be with less than 3 weeks to expire.
Speaking of the futures curve out there, and this will probably get into this more on vol views tomorrow, of course, but you see that big piece profiling how the flattening of VIX futures term structure just devastated SIBO's earnings this past quarter. They even mentioned it on their conference call. You're getting pretty deep into the weeds on a conference call. You start talking about contango and backwardation in VIX futures term structure. That's impressive or impressive on several levels. If they're looking for an excuse, it's a pretty deep in the weeds one. But pretty interesting nonetheless. That caught my eye. And all the history of earnings miss excuses I've seen, it's the first time I've ever seen VIX futures flat term structure being bandied about. So I thought that was pretty interesting stuff. Mr. Viceroy, same question for you. What caught your eye in today's activity, sir?
Not a lot. Very, very quiet day. I'm on the topic of volatility, interestingly enough, I'm writing a piece on earnings plays, and the compliance guys kicked the piece back to me, wanting to know how the weeklies could trade at a volatility higher than the regular expiration. And I'm doing a piece where I'm looking at what happened to Apple and Amazon this time, where the weeklies were literally like 150 vol, and the regular Febs were like a 50 vol. And trying to explain what goes on in volatility, just listening to Mark, trying to explain volatility and having a good grasp on what goes on with it continues to be more art than science, I think, for any of us.
There certainly is a wee bit of both when you get into the analysis and the volatility side of the fence. And of course, last but certainly not least, you of the of the drinks with umbrellas and the shorts out there in St. Charles, Uncle Mike. Yeah, a little bit of action in your neck of the woods over the past few days. Seems like every time we beam into this show lately, it's just talking about nothing but the endless upward parade, upside explosion that is the Apple underlying. Of course, a little bit of a profit-taking volatility, whatever you want to call it, over the past few days. Started dropping off, had a bit of a hit, and then today had quite a range. It got down to, I believe, about 126.5 or so, and then closed the day about nearly 4 handles higher, right around 130.30 or so. So fairly impressive day from an overall underlying perspective. Apparently the bears can come out from Apple, but they can't come out for very long because the bulls just overwhelm them. So what's your take on the past few days and what's been catching your eye in today's activity, Mr. Uncle Mike?
Well, to start with Apple, yeah, you're correct. It's definitely had a little bit of a profit-taking move, to say the least. But it's up again today. Apple always goes up. I don't understand it, but it does. So I'm not going to argue with it by any means. I'm just throwing my hands up in the air and just thankful that I'm on in the bull camp for now. A couple other things that caught my eye, just to add to what Mark said. Yes, we had a little bit of a pullback in the bonds today. But the other thing that did catch my eye was crude oil, the slippery stuff. It's sliding a little bit today. So I had a down day. It's down, I'm showing about 4% on the light sweet crude. So there's definitely a lot of volatility in crude, but if you missed your opportunity to get into it a while back and you still have some bullish feelings on crude oil, now might not be a bad time to take some type of an action in terms of getting exposed to the slippery stuff.
Yeah, it looked like as the week was shaping up that maybe the bull run was finally starting out there, and perhaps you had missed your opportunity. Then, as like clockwork seems like in that product, once it got beyond a little bit of the rubber band range from those averages they've been battling around, probably the 55 level in the Brent and somewhere around the 45 level in the big WTI stuff, then they start to retreat and retract. That's kind of what we saw out here in these contracts as well, with a bit of a retracement. So if you are indeed a diehard bull, maybe this will shake your confidence, or maybe this will say, hey, this is my buy on the dip opportunity, whichever way you fall there in crude land. Their earnings season is pretty much winding down, but there were a few names that were catching our eye today. One of our old favorites here at the Options Insider, Crocs, just because we have a emotional attachment to it. This was the name when we profiled unusual activity on Crocs back very, very early in the early goings of our site and our network, the first few months. When we posted an unusual activity alert on Crocs going into one of their earnings, that was the first time we broke 1,000 viewers, 1,000 readers on the site. That was huge for us. We had, that was enormous traffic, and I'd never seen anything like it. That was crazy down. So we always hold Croc near and dear as a result, because it's kind of been off to the races ever since that day. So we always like to check in on Crocs, trading right around 1070 at the close today. Pretty much unched. These are, of course, the makers of those ridiculous plastic shoes that people seem to like for some reason. I don't really like the product. I like the name. I like the underlying. Their straddle going out fairly rich, about $130. So they're expecting some moves here. We'll keep an eye on them in the after hours to see if their earnings have come out. It looks like they have come out, and looks like the market kind of frowning on the plastic shoe results, down about 42 cents or so, trading about 10 1/4. Certainly well within the range of that straddle, though. Also, another one I know, Alex, you guys were talking about a lot, seemed to drive some volume on OX last year. This was, of course, the big hubbub over Herbalife. Is it a Ponzi scheme? Is it not? What the hell is actually going on out there? They, of course, have earnings tonight, too. They closed about 34 in the orders or so, up about $1 and change. On the day of that straddle, that Feb weekly straddle going out right around 285 or so. So fairly rich out there in Herbalife land as well. We'll see how this one comes in. This, of course, has been a tug of war, a pretty famous one between different funds out there. Some saying it's a Ponzi scheme and being aggressively short. Others talking it up now, saying it's oversold. I'm not sure if you have an ongoing FTC investigation into this. It's kind of hard to understand what future you're quantifying with your fundamentals, because they could all be thrown out the window. They even say by their own admission it's going to take several years to resolve this thing. So interesting. Despite that, a lot of the analysts actually have buy ratings on this stock, for whatever that means. Here we are in the after hours. Stock, I said, trading closed about 34 in the orders, trading about 33.40, down about $1.42. That straddle said going out about 285 or so. So we'll pay attention to those as the earnings goes on. Alex, did either of those two, probably more Herbalife than Crocs, drive any action over at OX today?
it's kind of the same passion investors bring to gold. People either love it or hate it. So it's mostly directional trading in the paper we see. It isn't a ton of premium selling, but it's pretty much people choosing up sides. And to your point, Mark, it's been kind of a tug and war. And one point Icon was right. Now it looks like Ackman's right. But it's interesting. I don't think it's going to surprise any of us if we wake up one morning and there's, an Herbalife headline that's negative. I don't think that's going to shock anyone except maybe Icon and George Soros, who've made big bets on it. But paper's been directional on Herbalife.
One of the other big announcements today coming out of our friends over there at the SIBO. This is something that our friends at Russell have been hitting to me for a while. Of course, you work with them on the Volatility Views program, saying there's some stuff coming out of their neck of the woods looking to expand. They, of course, had that deal they announced recently to take over the merger, whatever you want to call it, with the London Stock Exchange. We're starting to see the fruit of that deal now as, of course, Russell has licensed the RVX product to SIBO. Now they're going to be creating additional options products on the FTSE and other Russell indices. So looks like more expansion into the index options side of the fence, which is interesting. We also like to see this too. They mentioned in the release that both parties are committed to increasing investor education on options. We like to hear that because that's our neck of the woods. Mark, anything going on out there in the pit chat today, either with Herbalife and what's your take on perhaps the latest addition to I think FTSE options might be kind of interesting to play with a little bit.
I mean, I think FTSE options could absolutely be interesting. I wanted to take I take offense to your comments about Crocs shoes. All right.
You a Croc wearer.
I would have thought that you would have loved them. My understanding is that Crocs are mandatory if you wear a mock turtleneck most of the time. So I have to say I was taken aback that you don't like them.
I don't know if the two go together because one's kind of cold weather, one's kind of warm weather. But maybe I see your point. But
you throw some corduroys on with some Crocs. You wear the Crocs with the wool socks. That's the key.
I can see Tucson more with the smoking jacket. The smoking jacket and the Crocs I think could go well together.
Don't own a pair of Crocs for the record.
Speaking of Russell, the thing that really actually popped on us was that, the one thing I like to kind of watch is how all the volatility indexes are moving with one another. And the RVX, which is the Russell 2000 VIX, is vastly underperforming the S&P 500 VIX, the VIX, if you will. And every time we've seen that kind of underperformance, they flipped. And it hasn't been because because RVX popped. It's been because VIX is kind of crashed. So, I personally think that we'll see a settle above 14 for March, but I'm wondering whether there's a flirt with a 12 handle in VIX in the cards in the next couple of days. It's just kind of odd the behavior I've been seeing them. But I think FTSE options could be really interesting in the U.S. I'd love to see SIBO list FTSE and really stocks and V stocks would be options would be awesome on SIBO. I think a lot of people would want to trade those.
V stocks would be interesting. I wonder if that would kind of hit a little bit too close to home with VIX or not for them. I don't know, but it might be interesting.
I don't know that it would. I mean, those two don't definitely move in conjunction with each other all the time. And I know the volatilities get out of whack. You'd have a lot of people selling one and buying the other. I'll tell you that much. It would probably increase volume for both. It's I think, for every product like this SIBO can get going, it's kind of like, when you put a Taco Bell across the catty corner to a McDonald's, both the McDonald's and the Taco Bell see an increase in foot traffic. And so there's a benefit.
There you go. It always goes back to retail fast food for you, sir. At the end of the day.
Indeed. Well, it's certainly better than buying Shake Shack for a $1.6 billion valuation.
Well, I agree. I'm not saying I agree with SIBO that they shouldn't list it. I think they should, but I don't see them sometimes adding other products to the fold that may be seen as stepping on VIX's territory. Still, I would like to see it, and I definitely think the FTSE stuff and other stuff coming out of Russell could be very interesting. We'll stay tuned for that, listener, to see what actually develops in the coming months. Meanwhile, speaking of developing, the show's going to develop right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block. This is indeed the portion of the show where we dive across the tracks into some of the shadier parts of town from an options perspective. We're going to get right into the weeds here, listeners. No messing around. You like your cheapy biotechs, we got them for you. Going to kick them off here with Exelixis, Inc., ticker symbol EXEL. Closing, I should say, a whopping $2.93. So some of the other names we've talked about in the $5 range are too rich for your blood. Here you go, south of $3. This is the name that does a fairly decent 2,500 contracts. Of course, again, you could argue that every share of the stock that goes up is also an options trade, but that's a conversation for another day. Doing 10x that today, doing 25,000 contracts today. And what we saw going up here was a little bit of a head scratcher. It was size paper, that's for certain. And in the AUG2 puts, yes, the AUG $2 puts, you heard me correctly, going up 20,000 times for 50 cents. Paper was buying. It is a bit of a head scratcher, I say, because it looks like on the surface that this is a straight up close. 20,000 going up, 20,000 and some change. Open interest, pretty much 20,000 and some change. It's the only strike with any real paper open anywhere near it in August, except for on the put side, particularly until you get up to the 4 handle. So nothing else anywhere near it. No other trades going up that seem remotely related to it. So it looks like a close. But it doesn't seem that anyone is reopening here. So it's a bit of an odd thing taking off a size AUG2. If it was indeed buying to close, taking off a short $2 put position here with still many, many months to go, about 6 months to go here in this name. Again, some scattered buying and some May upside here, whether that's related or not. Yeah, about 1,800. The May 3 is going up. And it looks like actually a vertical, the May 3-5 vertical going up about 1,600 times or so. But other than that, interesting stuff here. Mark, what's your take on this? A bit of a head scratcher, closing on these two puts, probably, I'd say fairly certainly, but still a bit of a head scratcher as to why this guy put this on and then taking it off so far before any sort of maturation of this position.
I'm 100% certain this was an ad and not a unwind. I'm looking at the volume, and you know when that 20,000 traded that was open interest? Yesterday. And it looks like it traded around 40 cents. So,
well, there you go.
So what's going on here is we have a guy that basically he bought a bunch of this. My guess is with stock, and then just as he gets done buying a bunch of stock and buying a bunch of puts. So he did this with the stock around 267 when it was down a little bit. So he does that, and then the stock ended up 9% on the day. So he did it. What I think is doing is legging into a protective straddle. I don't know why you even bother buying the puts.
I was gonna say, what did the puts bring into the party at that point?
No, maybe he just he cannot tolerate not getting $1.50 back out of his purchase. Maybe that, or $1.60 out of it. He doesn't want to lose his entire nut. All right, maybe that's it. I don't know. I don't know why you don't just buy the calls for $1.20 then, or for probably at the time a dollar. But he ended up paying call it $1.05, $1.05 for the two calls. Or if you want to look at this as a straddle price, he paid call it like $1.45 on the straddle, and he's probably saying, I think this is going to be way higher. Or, at least I'll get my 60 cents out of this,
Yes, definitely an interesting one. Certainly the paper going up yesterday adds some color to the equation out there. Then I tend to agree with you, that it probably is piling on, unless this is the most schizophrenic trader we've ever seen, and he's putting on 20,000.
Not out of the question here.
Yeah, given the underlying move, he could be taking it off. But still, interesting stuff nonetheless in the vertical.
It could be possible, Mark, that there was a trade in like EXC, like Exelon, that has 20,000 puts somewhere, or like EXEL, and someone was unwinding an error trade. Obviously, that could be the case.
A little bit of a fat finger moving into the cheapy biotechs. Dangerous in the $2 to $3 land, because you're gonna move some stock when you do that. All right, next up here on the old odd block, moving away from the land of cheapy biotech, so we could easily do a whole show on cheapy biotech activity. There's so much of it, but we're moving out of the land of cheapy biotechs into the land of metals and mining. We've heard us talk about XLE before. Now we're going the XME route, listeners, with the S&P Metals and Mining ETF. Of course, ticker symbol XME, closing today 29.30, roughly down about 1% or so on the day. This is a name that does decent paper, about 4,000 contracts a day or so. Doing well over 4x that today, doing about 18,000 contracts. And all of this paper went up in pretty much one big trade, a little bit closer to home than the last ones. We were talking about August on our last name. Now we're looking a little bit closer here to March, in particular the March 29 puts, regular March, no weeklies here. When we profiled them first this morning, going up 15,000 times. That appears to be the extent of it, a few hundred more filtered in throughout the day, but pretty much 15,300 total on the day, going up for 59 cents. This is an interesting one as well. We also saw some stock going up to the tune of a little over 500,000 shares going up as well. So it could be perhaps a trader giving up on one of his earlier positions or perhaps exiting. There is, I should mention, nearly 20,000 contracts open on this strike, about 19,700. So he is perhaps giving up the ghost here on this strike, or perhaps he is, like our earlier friend, diving in, doubling down, saying the more the merrier. Where there's 20,000, there should be another almost 20,000. Mr. Sebas, where do you fall on the great put debate of XME today?
A great put debate. I didn't know that there was a great put debate.
You didn't see Crossfire today? It was a raging topic over there.
I mean, this sucker does a lot of volume. I mean, it really does. This strike in particular has seen a decent amount of action. And so, my guess is that, he's probably closing. Like these look like they went up with the stock around 29.32 on February 12th for somewhere around 90 cents. And he's probably covering for a profit because he, with the stock, let's see, I don't know the price he put up the stock, but it looks like he collected about 40 cents on those. So if he's selling them back, looks like the stock didn't do anything. And he just said "feh." That would be my bet. And so he might just be, unwinding and seeing there's better places to put my money than what's going on right now. Who knows?
"Feh." Is that the technical term for it?
That is a technical term. "Feh."
I say "feh." Is there a "feh" button on the OX platform? I say "feh" on this trade, and I move on to the next one.
Yeah, no, I used to have a "feh" sign in the pit when a broker came in with some BS mid-market thing from a BD I didn't want to trade.
You probably were that guy who would do that. I can see you doing that.
Get out of here. Nobody cares.
Nothing better than...
when you, like, some guy's been shopping something for like
a week.
Day and a half,
yeah.
And you walk in and you go, and he wants to sell it at, the option at, 75, and you go 70 bid before the broker even walks around in. He just turns around, doesn't even bother.
Oh, I remember those days so well. I missed them so badly. They split up a trade, both your pit and someone else's, and the guys in the other pit's not trying to lay it off on you, and you don't think they know what's coming. All that fun stuff. Yes, I missed that so much. Before we get lost dwelling on yesteryear, let's move on to our final name. Quite the tour here in the odd block today. We started off in cheapy biotechs, moved on to some metals and mining. Going to wrap things up in Japan. In particular, listeners, the iShares MSCI Japan ETF, ticker symbol EWJ. Talked about this one a few times in recent months. Closing today, $12.40, pretty much unched on the day. This is the name that does fairly decent paper, about 15,000 contracts a day, doing well more than that today, doing 100,000 contracts today. So size paper going up out here in EWJ, and the lion's share of that came in one pretty substantial call sale. And again, a little bit longer term than what we were just talking about. We're looking here at the Jan 2016 13 calls. That's what caught our eye here, to the tune of, when we started profiling these this morning, 50,000 of them went up in one block. That's a block. 50,000 is some size to do in one block. That's a heck of a facilitation going up there. Going up for 43 cents, obviously paper selling. As the day went on, another 30,000 going up, so just a ton, for a total of 80,000 and some change. I don't have the price on the latter blocks, but probably somewhere in that range. They went out 42 at 48 cents, so probably somewhere in that range. This looks like this could be closing again. There's about 111,000 contracts open on this strike. Also about 74,000, open on the Jan 12 calls as well. So perhaps our friend is either closing or could be perhaps adjusting his spread as well. An interesting one. There also was a bit of some nearer term action. Looks like a June 12, 13, or whatever that is, a vertical, stupid, whatever that was going up there, perhaps being closed out. There's about 30,000 contracts open on those strikes and about 6,000 actually so going up on the 13s. 8,000 or so going up on the 12. So it looks like someone perhaps legging into a vertical or unwinding a vertical or unwinding our favorite, the stupid, over there as well. But that was a lot of interesting paper cooking out here in EWJ, even though we profiled mostly the Jan call. So Mr. Sebastian, take us home. We're finishing up the odd block in Japan. What's your take here on our friend, the size call seller here in EWJ?
Looks like we saw 50,000 block. 50,000 of these trade on the 13th for around 30 cents. The guy selling up 43, up, almost 50% in, call it 2 weeks. He's taking his money, and then we get people. Looks like the seller piggybacker for the balance of the trade. We had open interest of about 70 grand leading into that 50,000 lot on the 12th or on the 13th, excuse me. And, so I'm guessing that this is just somebody, we had some piggybackers, or maybe this guy had a second trade from, way back in the day at a cheaper level. So certainly I'm with you. I think this guy's closing and he's taking profits. And, I wouldn't think too much beyond that, which I never would anyway. I mean, I don't think too much.
That's true. That's why we like you have you on the show. Very nice and succinct and to the point. But of course, interesting world tour here in the odd block. We like when we go to all corners, far-flung corners of the options market. We'll certainly revisit some of these, I'd imagine, in future shows. But meanwhile, it's time for us to keep on rolling right on into the Express Block.
The Express Block, brought to you by Options Express by Charles Schwab. Options Express by Charles Schwab lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources. Options Express by Charles Schwab is the online broker for all traders. Best of all, Options Express by Charles Schwab lets you trade stocks, options, and futures all in a single account on powerful yet easy-use trading platforms, including mobile devices. Visit optionsexpress.com for your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome to the Express Block. This is indeed the portion of the show where the Viceroy dons his fanciest of hats and perhaps his fanciest watches. I don't know, it's not a video show, listeners, and takes us behind the scenes into the realm known as Options Express by Charles Schwab. Maybe we'll make a detour into mobile. Maybe we'll make a detour over to the trading desk. Maybe we'll make a detour into the tech side. We never know where our adventure is taking us. Mr. Viceroy, where is our adventure headed today?
So we're going to go down three paths, and I think ironically you touched on all three of them. But first, a conversation about mobile, and let me emphasize that Options Express and Schwab are separate companies, but both owned by the Charles Schwab Corporation. And the Schwab Mobile app, which I know we talk a lot about mobile and the future of mobile, but the Schwab mobile app hit 1 million downloads this week.
That's something. As someone who has a mobile app out there, I know how many downloads that is.
Yeah, a million people out there with mobile, and I get stats periodically on how much business is being done, and we'll emphasize that I'm a bit of a geezer. I'm an old guy. I've been around a lot, and I didn't embrace mobile as quickly as other people did, but the amount of business that's being done on mobile is astounding, and the direction that that's going, it wouldn't surprise me if in 3 or 4 years there are more stock trades. Now, multi-leg options still has some challenges, but it wouldn't surprise me if in 3 to 4 years the majority of the stock business isn't done on a mobile platform coming out of the individual investor community.
I mean, if you're just slinging stock now, why aren't you just on a mobile device? What advanced functionality do you need to sling your stock?
Yeah, and the thing about mobile is I suspect that the firms are going to try to do stuff to incentivize mobile. So I suspect you're going to see things like possibly better pricing on mobile platforms to try to bring people into it. But, it's not a hard forecast. It's not, every time I say something like that, somebody shoots me an email and said, did I miss a meeting? No, that's pure speculation on my part. But the other point, you talked about the trading desk, and I did check in with Grigas just before the show. And you can tell I have no voice, so things have been busy lately. But one thing John wanted me to emphasize and kind of restate, and I know this is a very uninteresting topic, but it's tax season, the 1099s are out, the desk at OX, the desk at Schwab, everybody has taken the extra training for taxes. If you have a question on your 1099, please don't hesitate to reach out to one of the help desks. And there are there's even a higher escalation level of tax specialists. So if they can't help you with a question, they'll get you to somebody who can help you with the question. And the third and final topic is, again, I want to remind everybody, the $150 Amazon gift card. If you're a new account coming to OX, on the landing page, optionsexpress.com, navigate down to the lower right hand of the page, and you'll see that there are some terms and conditions that apply to it. But let's get those cards out of Grigas's desk drawer and into the hands of new customers.
Not so fast, listeners. I could use a few Amazon cards. So if you don't rush in, we'll just have the Viceroy send them over here. So by all means, don't take them up on that offer. No, I'm just kidding. Of course, surf on over to optionsexpress.com. Kick the tires. Check out all the tools that Alex is always referring to on the show. And if you like what you see, might as well get that gift card. Take it. Run with it. A lot of stuff you can get on Amazon. I know from experience. I'm a Amazon junkie. All right. Thank you for that, Mr. Viceroy. And now, because it's Thursday, it's time for you guys to take over the show. It's time to dive right on into the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everybody, welcome to the mail block. Like the man said, this is the part of the show where you guys take the lead and we follow you guys for a change. A lot of great questions coming in. Of course, you can send them a lot of different ways. Find us on the website, click on a comment on a show note, leave a comment there, or a lot of you like to use the website feedback form on the website. Of course, you can do that as well. Of course, questions at theoptionsinsider.com also works. Just make sure to put question for this case, for the option block, somewhere in that so we know which show to route your question to, or on social media, twitter.com/options, facebook.com/theoptionsinsider, or just Options Insider on StockTwits. All right. And of course, all that's baked into the mobile app with the exception of StockTwits. I don't believe that's available on there. All right. Going to kick things off. Got a bunch of questions. We're going to dive right into this one really quick. Mark, I think you'll find this one interesting. We talked about this, I believe, on this show, but of course, this person actually wrote into one of our other shows on the network, but we discussed it on this show a few weeks ago. But I was looking through, this is kind of in relation, it's a kind of feedback to an earlier question from one of our listeners, Brian Collamer, discussing the different rates of theta decay of an option, and we discussed how the at-the-monies decay one way and some of the out-the-monies don't, and we wanted to know if he had any data that he was talking about. So he sent some links to us, linking to some discussions on the LiveVol area and others. I thought it was interesting, Mark, what I think you'll find interesting, of course, is that one of the links he sent us actually quotes your book, and this is the write-up they say about it. They say, Jim Bittman does a superb job of making this point in his classic book, Trading Options as a Professional, and Mark Sebastian of Option Pit fame, he forgets the option block, reiterates this point in his fantastic book, The Option Trader's Hedge Fund, on page 94, when he says, there is a flawed belief that option time premium decays exponentially across all strikes in the final 30 days of an option's life. This is completely flawed. In the final 30 days, studies show only at-the-monies decay exponentially. So there you go, Mark. I thought you'd find that interesting because someone, A, actually read your book, and B, is now quoting it for the masses to see.
That I love it. Yeah, no, the further away from at the money, the more linear the decay. A lot of people aren't aware of that. It's 100% true. So, I'm a big proponent, kind of either set stuff near the money and tight, or set stuff way out of the money and further out. So, I'm a big fan of weekly butterflies and super near-term butterflies, or long-term strangles and condors. That's where you're going to get, I think, the most efficient pieces of your trade. So that's kind of my general thought process. Now, the idea is that, when he mentions kind of the out of the money options, once you get to about 10%, closer to 10% out of the money, an option is going to lose more notional value from, day 60 to day 30 than day 30 to 0. And that's where things get really thrown off. So I love the question. So good stuff.
Yeah, he's one of our more active listeners, writes in quite a bit. I think a lot of our listeners have probably experienced that. Maybe they didn't realize it, but experienced that in the market. Of course, a lot of our listeners, whether through Alex's premium harvesting or just on their own, like to blast out, out of the money puts or sometimes out of the money calls. And they experience that where they get frustrated because they collect whatever it is, they sell it for 50 cents and it decays all the way down to about 15 cents or so. And that final 15 cents over the last couple of weeks really seems like it takes forever to come out of that option, and that's where people get in trouble. That's why we always counsel people to close out those shorts when they've gone your way, certainly when they get to that dime, 15-cent range, because you waiting for that last dime or so to come out of it could really cost you everything. And that's kind of a literal interpretation of what you're just talking about right there. All right, so great questions. Listeners, we got a lot more. Let's see how many more we can get to. I just wanted to get Mark his free plug here on the show. Let's see here. We have a question from... this is actually an interesting one, going back to our crude oil, discussion from Thomas. He writes, is there an active spread market for options on crude futures? A two-part question, actually. So that's part one. And two is, also, do you feel that futures traders make better options traders than stock traders? Maybe we'll start with the second part of that first, because that's the more, straightforward part we can talk about right now. And that is, of course, I think when you look at the stock people, the basic retail stock guy like Alex was just alluding to is going to be trading all on mobile pretty soon, and they start coming to options, they have a bit of a hard time because they're encountering some things they haven't really had much experience with before, namely leverage. A, options are, of course, leverage instruments, and B, an expiration date, let alone things like volatility and others. Those also add to the equation. But those two fundamental characteristics of options, the fact that they leverage and the fact that they expire, they go away at a certain amount of time, really tends to blow a lot of people's minds when they're coming from the world of, let's say, buy and hold an Apple. You buy Apple, you can hold it till forever. If it drops against you, it's a long-term investment. You can't really do that with options because they go away. So in that sense, futures traders are exposed very early to those two concepts, leverage and indeed date of time of expiration. So they have that leg up definitely when it comes to stock traders. And of course, they're familiar with the derivative instruments. So an option isn't that much of a leap down the road. Uncle Mike, you're talking about crude, so we'll give you a chance to chime in on this one as well. What do you feel about futures traders as options traders, and also what's your take on the crude intra-month futures spread market?
In terms of the crude inter-month futures spread market, that one's a little bit above my pay grade.
I'm sorry, options on the options spread market, not the futures. Options on the futures.
Well, I mean, I've traded options on crude in the past, and so I'm not doing it at this point, but I have done it in the past, and it seemed very efficient to me that when I had done it. So it was definitely a very liquid, workable market, and it works, and I don't have any problem with it. Now, I'm not sure if they have options on the mini crude contract or not, but the thing about trading crude options on the big contract is that you're trading it for a pretty decent chunk of cash. A one lot is $50,000 worth of underlying, approximately, in the big crude contract. So one thing just to definitely have an understanding of is the contract size, the risk reward, and that type of thing as to what goes on in the crude market. Now, in terms of whether option traders are better suited to come from a futures background or an option background, I agree with everything you said in terms of how the futures trader will have some familiarity with expiration, with derivatives, with leverage, and that type of thing. But on the stock side of it, I would say that if they've had success on the stock trading, or if they've had success in the stock trading world, and they can find a way with which to relate that to options by being a directional option trader, such as buying deep in the money calls, such as doing things that are more directional, then in that case, I almost think that the stock trader would be an advantage of the stock trader because of the fact that the bottom line is this: if Alex knows a million times more about options than I could ever dream to, but if I have insider information on a stock and Alex doesn't, and I consistently have insider information or am a better stock trader than Alex in theory, I'm going to out-trade him because of the fact that the direction that I would make in the stock world, if I could translate into options, I could beat Alex. Now, keep in mind, I'm using a very vague example, but I think there's a lot that holds true to that, because picking the direction of the underlying, it's obviously an extremely important thing if you're a directional option trader. Now, if you're looking to be a more neutral option trader, then I think that the advantage would go to the futures trader, just for the reasons with which you had mentioned. The futures trader would have the mentality of the market can go up, the market can go down, you can be long or you can be short. In the futures world, for every long, there's a short, every short, there's a long, and it's not that way in the stock world. So the futures trader will have the mental capacity to say, well, okay, I think this stock's overbought, let's buy puts. Whereas the stock trader will think, well, everything goes up, so we just have to wait it out a little bit, and that's where the stock trader might get hurt. So I think there's an argument for both sides of the coin on that.
All right, Mr. Viceroy, you were directly invoked, so you have to weigh in. We have one vote for the futures guy, one kind of wishy-washy vote. Started off for stocks, then he kind of got a little bit 50-50. So where do you fall on this great debate, stocks versus futures as an options trader, Mr. Viceroy?
So I'm going to come at it from a little bit of a different side. The first part of the question was, and I'm going to spin this, how robust are the crude futures options, and how robust are futures options versus securities options? And I would have told you 5 years ago that futures options traders and the technology on the futures options floors was vastly inferior to the securities options. I mean, they were just slow to innovate, and in many instances, now that the floors are closing, they're still somewhat behind. In the last 5 years, that gap has closed, but there are still differences. And again, maybe my interpretation of the question is different here, but the securities options markets are much more robust. I mean, the technology at the CBOE can take a 12-legged spread. The technology at the CME can only take a 2-legged spread. So there is still a bit of a catch-up, but to Mike's point, fundamentally, once you understand the issue of tick size, trading hours, that can be a real surprise for some people, especially in products like crude, where the day session ends, you turn off your machine, and then you find out that there's an evening, a weekend, and an early morning session. Some people crave the fact that you can trade, virtually 24 hours a day, 7 days a week, which you can in many of the crude products. Some people fear that. So you kind of have to find yourself. But I agree with everything Mike said, and they are still different animals.
All right, that's going to do it for the mail block. Keep those questions coming. We'll get to a lot more of them on a future episode. Meanwhile, we've got to keep on rolling right on into our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, you know the song and dance by now. This is the portion of the show where we tell you what we're keeping an eye on for the rest of this week into the old weekend. Quick check back on the names we talked about at the top of the show that have some earnings. Crocs still selling off down about $10 even right now in the after hours, off about 70 cents. Looks like not loving the results from the plastic shoes. Herbalife taking a bit of a swing. What's selling off now is actually up about 50 cents in the after hours. So a little bit of after hours volatility in Herbalife. Perhaps not a surprise on that name, a very volatile one as we've seen in recent months. All right, and looking ahead, Mr. Sebastian, we'll start with you. What is catching your eye? What are you watching for the rest of this week into the old weekend?
As I said at the top of the show, I'm waiting for that VIX March VIX cash spread to tighten up. I think, we should see. I think we're going to continue to see rates rates fall, and bonds rally. They're at kind of a dip point. I like bonds here. And, I would not be unshocked to see us kind of shake off this FCC stuff and a couple of other things better than a Taylor Swift song, and maybe make a run at 21.25, sometime maybe tomorrow. I think we've got a 0.5% day in the holster right now that I could see moving. Next week we've got non-farms. That could be a little bit of a driver, but the market hasn't really moved on that in the last couple of cycles. So I don't know. Those are kind of the major things, along with, like I said, that RUT and RVX versus VIX spread.
And Mr. Tusaw, same question to you. What's catching your eye for the rest of the week into the weekend?
Similar answer. I think the main event, of course, is non-farm coming up next week. In the meantime, I'd say probably the main thing with which I'm watching is same thing I'm watching all the time, is to see if the S&P can make a new high. Also, with the dip in oil, if you're looking to get in, this might be a pretty good opportunity for you.
And Mr. Viceroy, take us home. What are you watching for the rest of this week, sir?
I agree with both of my peers. Watching the price of crude. Psychologically, I think NASDAQ 5000 is, if not tomorrow or the beginning of next week. I'm still in S&P 2200. I agree with Mark on rates. If you saw the Koch deal today, I don't remember the terms of it, but Koch sold long bonds in Europe for, next to nothing in terms of yield. I think yield is going to come in. I think rates are going down. Eventually, they're going to go up. I mean, if you predict they're going up and you did it all of last year, you were wrong, and I include myself in that equation. Psychologically, new highs on everything. VIX going to 12.
Speaking of Coke, you see your friend there, Warren Buffett, eats like a child. Apparently, that's how he stays so healthy. Chocolate chip ice cream and potato sticks for the morning, and of course, 5 or 6 cans of Coke throughout the day, because he is a big Coke devotee. And apparently, that's how you live to 85 or whatever the case may be.
He used to carry his own six-pack when he was at Solomon Brothers. I would ride the elevator at the Millennium Hotel with him occasionally, and he would bring his own six-pack of full-leaded Coke to work with him. So, interesting guy.
The man likes his sugary snacks. Let's just leave it there. All right, that's going to do it for the Around the Block. It's also going to do it for this episode of the Option Block. But before we go, as always, let's check in with each of my cohorts here on the old All-Star panel, see what they have cooking that may interest you. Starting off with you, Uncle Mike, what's cooking in the land of RCM Wealth Advisors?
The event we have coming up in March in Minneapolis, sign up on our site. Also, we got events coming up later in the year in Chicago in May, Boston in July, Houston in October. So for more info on it, go to rcmfutures.com.
Thank you, sir. And Mr. Viceroy, was coming down the pike in the land of OX education and live events.
So Nina and Jimmy are on airplanes as we speak, going out to Traders Expo in New York. If you're in New York City, Traders Expo, I think, is at the Marriott Marquis. Most of the event is free. I know the exhibit halls are free and many of the presentations are free, but get an opportunity to meet Nina, who runs education here at OX, and Jimmy, who runs the traveling roadshow. They'll be in New York this week. Next week, little bit of a pause because the crew is out, but Thursday, March 5th, Dan Gramza from the CME is going to be analyzing futures trends. Nina's back. She's going to do an intro to long calls. On Friday the 6th, we're going to do an onboarding trading platform and a site tour. And then the second Saturday, the Saturday after this one, Jimmy comes back from New York, flies out to Denver, and is doing his 3/4 of a day live in Denver.
And last but certainly not least, Mr. Greasy Meatball, what is coming down the pike in the land of the pit?
Saturday, we've got our event, Creating Income with Option Spreads. There's still time to join if you sign up at optionpit.com/income. If not, then you have yourself a lovely weekend, folks.
There you go. So check out more at Option Pit. And of course, on behalf of Mark and Alex and Uncle Mike and indeed myself, I want to thank all of you out there in the listening audience for downloading, streaming, subscribing, and of course for sending in such great feedback and questions. Keep them coming. And we'll see you next time right here on the Option Block.
The Option Block was brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.